Hey, good morning, everyone. I'm here with a silver update. Um, so yesterday was a dramatic day in the silver and gold markets, and right now, as you can see in the green line, we're kind of holding steady, slightly lower after the lows of yesterday. Asian trading did bring it up a bit, but then when Europe came into trade, it started to sell off again slightly. So now we're at the current level of 2671, as you can see. Yes, I want to talk about the apparent manipulation yesterday, the sell-off, and the 4-week trend that I've been noticing. So we'll start with, and these graphs are courtesy of Ed Steer from KC Research. We'll start with the most recent one, the 21st. As you can see, on the 20th, silver was at 28.50, sold off a little bit to 28, and then and according to the mainstream media, this was a response to HSBC manufacturing from China, and it only decreased 0.6%. So I find it hard to believe that silver sold off from 28 to 27 based off of a 0.6% move. That is pretty amazing considering the proportions we're talking here, because silver sold off over 5% in the day. But as you can see, it was the whole day pretty much was a bad day for silver. It was just getting slammed the whole day. And then, anyways, that was on reports during the day of continuing claims that were over expectations. Well, let's go 7 days before, the week before, on the 14th. Another day of continuing claims higher than expectations, and you get silver and this was the day that was just blatant, where it just got slammed straight down. As you can see here at 11:45 in New York time, 11:30ish. I mean, that's just blatant. That was a disgusting sell-off. Okay, now let's go to the 7th. Another day of continuing claims higher than expectations. You would think that as the job data comes in more abysmal every week, that the prospects of a sustained recovery are worse and worse. But yet, it seems that the banking cartel is trying to track silver as an industrial metal. They want the mainstream media to install in your mind, your psychology, that silver is an industrial, not a precious metal. So they don't want you to invest in it. That's my theory. And as you can see here, it got slammed down, $29.50, all the way down to about almost $28 here at the bottom. Now let's go to May 31st, 7 days before. Oh, another day, as you can see before the data came out. The data always comes out at 8:30 New York time. Asian trading in Europe brought silver up from 27.80 to 28.20, a 50-cent swing. And then when the data came out, again, continuing claims higher than expectations, more job losses, it began to get sold off again. Then it made a short rally, then it got sold off all the way down into New York Globex close. So I'm noticing a 4-week trend here. Every 7 days, silver gets a big slam in the face, really. And here's what silver's doing right now. It's down. This is courtesy of Gainesville Coins. It's down about 13 cents, and gold is down $3.80. Platinum's down $7, and palladium's up slightly. But this is live, so anyways, it's interesting to see this going on, and it's just ridiculous to have this happen every 7 days. And Bernanke spoke on the 20th, and as you saw, silver didn't really react as nearly as bad as what it normally would in the past. So it seems that the banking cartel has changed their strategy to make you think that it's an industrial metal, and they want you to not buy it, not invest in it, and they're trying to basically steer all money away from it. But anyways, here's a PDF of Phoenix Capital's latest research, and it's pretty interesting. It shows the bank leverage of each country in Europe and the US, and you have an average of leverage of 26 to 1. Lehman was 30 to 1 when it collapsed. So all it takes is 3.85% decline in the underlying investments of those banks that are leveraged 26 to 1, and they are completely wiped out. So you have Portugal here at 16 to 1, Italy at 20 to 1, Ireland 16, 17 to 1, Greece about the same, and on and on and on. You can see Germany is obviously way over leveraged. Deutsche Bank leads that group. They're at 31 to 1 leverage. And then the US is down here around 12 to 13 to 1, which is not as bad as the rest, but it's still bad because when these banks collapse, that means these US banks that have a lot of investments overseas in Europe, they're going to be hit as well. And it's going to be an interesting ride through the rest of the year here. Here's a chart showing the bank rollover requirement. 2011 is green, 2012 is red. So you have a lot of these countries that have to roll over their debts each year, and it's getting bigger and bigger percentage of the total assets they have. And the EU is going to have to essentially bail out these countries that are rolling over debt. That's why Spain is in such dire straits right now, because you can see the red bar here is much bigger than last year's, and Italy's in the same position as well. They're not looking too hot. And here's just corporate debt to equity ratios in the EU countries, and I mean it's pretty bad. France is 76%. You have Portugal up here 145%, and actually PIMCO's CIO strategist has come out and said, where is it? Right here, Mohamed El-Erian, PIMCO's co-CIO strategist. He has come out and said that currently France has levels of 100 to 1 leverage. So that's pretty scary. And if France goes down, Germany's going to definitely leave the EU because they're not going to prop up a French country that size. I mean, it's just too big. And here you can see the GDP of each respective nation here. Germany's down here at 3.2 trillion, and it's getting abysmal. And total assets in Europe are 46 trillion. That's over 3 times the size of the U.S. economy. I mean, that's ridiculous. It's getting scary out there, and I honestly foresee Greece will leave the drachma by next month. And the reason that will happen is because the Germans are going to force a little more austerity on them, and the Syriza party that won or lost narrowly will, in effect, gain more support, and they'll revolt against austerity because they're going to feel too much pain, and they're just going to devalue to the drachma. And when that happens, you're going to see Italians, Spanish, and French panic for a currency conversion. So they're going to pull out euros and invest it into other assets in categories such as U.S. Treasuries, which is going to be a freaking nightmare, gold and silver, and as well as some other safe haven assets. But it's interesting to also note the ESM facility that is supposed to bail everyone out hasn't even been developed yet. It's not even voted through yet. Germany still hasn't even said yes to it. So that's freaking scary because I mean that's supposed to be due by July 1st, and as you can see there, this particular newsletter suggests shorting these banks. I'm not suggesting that. That was just one of their suggestions. And anyways, I think it's a great time to pick up silver and gold at these prices. So I mean, if you have any extra cash on hand, pick up a certain percentage. Don't go all in, but it's definitely a low that's not deserved. So it'll be interesting to see how things shape up. And I had a lot of comments on the last video about, well, who cares if they're manipulating the market downwards? Just keep stacking. Well, the problem is it does matter, because if they continue to shoot silver and gold in the head, it might not increase the way that we thought it would. It's an interesting scenario. I mean, there's a possibility that they create such an aversion to investing in silver and gold that people actually turn away from it as a safe haven asset. So that's my main argument is, we have to care that they're manipulating it downwards. It's the free market that they're manipulating. They're manipulating price signals to investors, and they're actually hurting everyday people that do invest in the futures market, as much as you might disagree with them. But I mean, there's people that try to make a livelihood off of this, and they're just getting absolutely creamed from it. Andrew McGuire has an interesting documentary to show about that, so I hope he releases it someday. It was some British film crew that did it, but hopefully it gets around. But anyways, that's my silver update for now, and in the meantime, just keep stacking, and we'll definitely look forward to the next EU and Bernanke's next meeting, which should be coming up in sometime at the end of July, I believe. But there's a slate of central bankers to speak in the beginning of July, and things are really going to get interesting here because there's so many disagreements between socialist Holland from France and Merkel, and even Merkel's own constituents in Germany are starting to be fed up with her. 11 of the 16 states in Germany are now anti-bailout, so she's treading a fine line there. And as soon as Germany leaves the EU, it's all over. I mean, it's an end game, and the total banking collapse will happen by then. I think it'll happen before then, but we'll see. The next 6 to 18 months are completely crucial here, and the mainstream media is just totally just walking over this idea that we're in such dire straits right now. It's completely unfathomable, and they're trying to bring in more retail investors to the market, and they're just going to get killed. But like I say, you got to spread the truth, spread the news that silver and gold is honest money. This is where you should be putting your your hard-earned assets, your promissory notes that the government gave you, your Federal Reserve notes. Anyways, have a good one, guys, and I'll see you next time.